Good morning, ladies and gentlemen. This is Alex, Senior Account Executive at GDMFX with your European Session Morning Outlook. We'll start with the North American markets. The dollar was higher against the euro and the yen in Asia trade this morning. Yesterday's events were initial jobless claims came out 15,000 worse than expected. And the Philadelphia Fed Manufacturing Survey, 2.5 points better than expected at negative 3.5. The Dow Jones and Nasdaq both ended sideways. The Dixie is up to 99.30 from 99. Biggest mover was USD Canadian dollar, 200 pips down. The USD Swiss franc, small movement of 20 pips up, and USD JPY ended 75 pips up. Today's events are Tier 2. We have the Chicago Fed National Activity Index for December, market manufacturing PMI for January, CB leading indicator month on month, and lastly, we have the whole specter of Canadian Consumer Price Index data, which measures inflation. Alright, in the EU, the interest rate and the deposit rate remain the same. The euro strengthened against the dollar Thursday afternoon, reversing a sharp decline from early in the session. Earlier, the euro fell as low as $1.0778, its weakest level against the dollar in 2 weeks, after European Central Bank President Mario Draghi said the central bank may review its policy stance at its next meeting, which was seen as a warning that it might again expand stimulus measures if the recent market volatility continues. Mario Draghi's speech had a substantial effect on the markets, with the Euro USD seeing a 150 pip range. It's still going down today. Today, the meeting in Davos continues. We also have the market manufacturing PMI, market services PMI, and market PMI composite data from Germany and the Eurozone. Alright, in the UK, the RICS housing price balance came out as expected. It's at 50%. Today's events are retail sales data and public sector net borrowing data. Onto the Asian and Pacific markets, the Nikkei 225, it closed up 5.9% to 16,958 after a 2-day losing streak. Still, the benchmark index is lower by about 11% since the turn of the year. The rise in the energy sector was the reason for the gains yesterday. In the Pacific, the global iron ore trade may be disrupted after Vale SA, the world's largest producer, was ordered by a Brazilian court to temporarily close one of its main ports following alleged environmental breaches. Futures for the raw material in Asia surged along with miners' shares. This is especially important for Australia, as that is one of their major exports. Alright, the last sector for today, commodities. We had the natural gas storage change. Storage in the US in the week ended January 15th fell by 178 British thermal units. This is in the billions, of course. Crude oil stock exchange, inventories rose by 4 million barrels for the week, ending on January 15th, significantly above forecast for a 2.8 million build. Gold had a range of $12, trading at $1,098. Silver had a range of 32 cents at $14.08 now. Crude oil had $2.40 range at $30.63. And natural gas is trading at $2.15 at the moment with a range of 10 cents. Today we have the Baker Hughes U.S. oil rig count. Alright, thank you for the attention, everyone. That was your European Session Outlook. I'll see you next time. Goodbye.